What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Tesla's financials and more specifically walking through my operating model for the company. This is basically a rough calculation I do of their financials from now through 2024 on their income statement. It helps me get a valuation for the company and sort of think through, how much I think this company is going to be worth in the future. And I think it's a great exercise to do for really any company that you own. And so this is an episode I make periodically. I made a couple of them. I haven't updated my model for the past 6 months. Honestly, hasn't even changed that much, but I have tweaked it a little, so wanted to make an episode walking through it today. So we're going to go right into this model that I have that is on Google Docs. I'm going to put a link in the description so you can download it and play with it if you want. I'm also going to put a link to the old operating model, and I'm also going to put a link to a Google Doc where I wrote down all of the changes that I made and why I made them. So maybe that can help you out understand why I'm shifting my model the way I am. So to start, let's go right into the automotive revenue tab. And this is sort of the backbone of the entire model, really, because right now the biggest piece of Tesla's business, and by far the biggest piece that I model into the business, is their automotive business. They're selling cars, the Model S, X, and 3. How many are they selling? What's the average revenue per car as a whole? The way I run this calculation here is I put the unit sales of each car for each year that I think they're selling, total that up in the cars delivered tab up here. And then right below that, I have a revenue per car up to until 2017. This is the historical numbers of what it actually was. And then in 2018 and onward, it's just an estimate. And then I do cars delivered times average revenue per car gets me to total automotive revenue. And this includes service revenue. So that's why it looks a little bit bigger. You might say like, wow, 80,000 is a lot. But once you include service revenue and leasing revenue, the revenue per car goes a little higher. So the trickiest part here is not actually building the model running all these numbers. The tricky part is really estimating how many cars Tesla will deliver and with what profit margin. And so that's why this part of the model is so important. I haven't actually changed my estimates that much. I did turn down Model S and X units, which I had selling about 105,000 units total. Now I have about 100,000 units total for the year 2018, which is in line with Tesla's guidance. I've upped my Model 3 units sold to about 150,000 from 140,000, given the strength in recent deliveries. And then the one bigger shift that I have here is in 2019, I've upped my Model S and X deliveries significantly to about 120,000. And this is because I've had this theory for a while that Tesla will do sort of a bigger refresh of their Model S and X. Now, I know Elon Musk says, we never do product refreshes. We're always just slowly upgrading our cars. Whenever we have a new innovation, we put it into the cars. Sure, kind of. But there's also been this battery contract with Panasonic where there's these 1850 cells or 1860 cells or something like that in the Model S and X, which are different from the 2170 cells in the Model 3. And so my theory is that these more advanced energy dense cells that are in the Model 3 will eventually find their way into the Model S and X. And we actually got some clarity on that, which is that there's a deal with Panasonic that I believe expires in 2018. And that was for about 100,000 battery cells per year or battery packs per year. And so that's why they've been limiting sales to about 100,000 for the past 2 years for the S and X. So my theory is sometime in early 2019, maybe they'll do this refresh where the Model S and X will get the new 2170 cells. They'll have much bigger range. That'll spur demand, and Tesla will sort of start marketing these cars more. And then that artificial cap of 100,000 will get lifted. And so that's sort of the rationale of why I have Model S and X units going up pretty significantly in 2019. And then we have Model 3 units, which I assume are going to continue to ramp to units of sales about 400,000 in 2019. And I don't even think that that's peak demand for the car. Moving to 2020, I have like a slight increase in Model S and X, which I carry throughout the model. Model 3, I have scaling to 600,000 units. And then originally, I did have the semi-truck starting deliveries in 2019, but I pushed that back to 2020. It seemed like very late 2019 is when they said they were going to do it, add some Tesla time. I just think it'll be 2020 before we really see deliveries of the semi-truck. I also decreased my deliveries of the Roadster in 2020 from 1,000 units to 500. Not that big of a difference, but that is what it is. Then going forward to 2021, I have the deliveries of the Model Y starting. So this is probably the biggest thing happening in my model there. I didn't actually change the Model Y timeline. We're probably going to get a Model Y unveiling sometime in early 2019. March 15th is the tentative date, according to Elon Musk. My guess is it'll probably be a little bit later than that. And they're going to start deliveries in 2021, probably late 2021. And then I have Model Y ramping significantly in 2022 to 350,000 units And that may seem like an aggressive ramp, but Tesla, they constantly ramp production much faster of their vehicles than they have in the past. And this sort of S production curve is something that I've taken note of and have put into my model in a couple different ways here. And specifically with the Model Y, it looks like a huge jump. If you think about how Tesla's going to have improved their manufacturing capacity, they've said multiple times the Model Y is going to be like a manufacturing revolution. I just think the ramp will be much quicker than anything we've ever seen before, just like the Model 3 was when they are ramping that product line. And then I believe the Model Y will cap out at about 700,000 units per year along with the Model 3. This could be a low ball because the Model Y is a sort of hatchback product, which actually is a bigger market than the sedan. So in theory, it could have bigger end demand than the sedan. So it could be more than 700,000 units, but that's what I put there for now. Moving down to the pickup truck. This is very speculative. This I have starting deliveries in 2022 because I don't know. What I feel like is the right timing. I think Tesla's going to be better and bigger and faster at bringing products to market as we get into the early 2020s. That's why they're going to be able to ramp this launch this even while they're scaling the Model Y. Just like the Model Y scaled rapidly, the pickup truck production is going to scale rapidly as well. And so I think that although I have it scaling to 500,000 units in 2024, I think eventually it could be doing way more than 500,000 units globally. I mean, Ford, for example, sells about 900,000 units of its pickup truck or F series in the US alone each year. So if Tesla gets more market share than Ford has today, it could be like 1 million units of the pickup, but that's my estimate for now. Back to the semi-truck. In my previous model, I had them scaling to about 100,000 units by 2024, but remember I started them deliveries in 2019, so I pushed it back a year, and I've actually scaled it up a little bit faster to account for that S curve that we talked about, and this new revelation of just how quickly Tesla will be able to scale its manufacturing going forward. So this is sort of the wrap up of the unit sales that I'm expecting through 2024. Now moving up to that revenue per car estimate, you can see that I have it going from 80,000 in 2018 to about 65,000 in 2019 because they're going to be, in my opinion, delivering a lot more of these lower cost Model 3s. That's going to take down the average revenue per car, and then it's going to stay flat around 65,000 as the Model 3 continues to ramp, the Model Y ramps, and they sort of keep getting cheaper going down. But this number I changed dramatically in my last model. I think I had it ending at 70,000 or 75,000 per car, and so this is still very in flux, but that's what I have now. And as you can see from a cars delivered perspective, I have them crossing 500,000 units in 2019, which is a crazy accomplishment, up about 10x from 2015 in just 4 years, a 10x production, which is insane. And then through 2024, doing over 2 million units in the year 2024. So that's why when everyone says, oh, Tesla, they're valued so much more than Ford, but they're only selling 100,000 cars per year, like you got to look at the growth. Yeah, they were selling 100,000 cars a year in 2017. This year, they're more than doubling that to 250,000, then doubling it again next year per my estimates to 500. Like this is just growing so rapidly. Before we know it, I think Tesla's going to be delivering millions of cars per year. So adding this all together, we get to the total auto revenue line. And once again, this includes service. But so as you can see, I have Tesla's automotive revenue, which is going to be about 20 billion this year per my estimates, scaling to, over 50 billion by 2021 and over 137 billion by the year 2024. So now let's move into the main operating model slide or page to see how this fits in. This is the line where that automotive revenue goes, and that is one piece of the business. Now, the other part of the main Tesla revenue driver that I have here in the model is Tesla Energy. Their batteries, their solar roof, their home, their Powerwall, they're going sustainable. These are the products that produce energy and store energy versus the automotive and truck part of the business, which is products that consume energy. And so this is a business where I had to take down my revenue estimates from 2 billion to 1.6 billion in 2018. And the biggest reason that I think the growth is slower than expected there is because Tesla's put so many resources into its Model 3 that's just been focusing less on energy. And so I think the growth rate there is a lot lower than the exciting potential of that business. But even so, like growing revenue from 1.1 billion to 1.6 billion is still big growth. And that's why I've assumed that growth will sort of pick up in 2019 as they're able to put more resources there, and then grows sort of at this pretty consistent but accelerating clip through 2024, getting to about 15 billion in 2024 revenue. Now, I do want to caveat this by saying, well, I think this energy revenue estimate could be super conservative because in the long run, JB Straubel and Elon Musk have said the battery and energy business could be just as big as the car business, and I believe them, but I still have it being about 10% or a little bit more than that of the truck or of the automotive business in the long term. And I feel like that's a very, very conservative estimate. Now let's move to gross margin. This may be one of the most important things. So for 2018, and as you can see, actually in 2017, I do want to point out that that gross margin of 18.6 for the automotive revenue was down because of Model 3 production ramp. And it even got hit really hard in early 2018, which is why 2018 gross margin looks kind of weak as well, but it's bounced back. It was well above 20% gross margin for the automotive business in Q3. I think it will be in Q4. Through Q3, gross margin for the automotive business was about 19%. So I think they're going to do like 22, 23% in Q4, bring the aggregate gross margin for the year to about 20%. So that's how I got to that number. Then I have it ramping to 22% in 2019. I think it could be like higher than that, but I think they're going to start selling lower versions of the Model 3. So you combine, production ramp efficiencies, getting better at manufacturing, but also bringing the price down. I think that's going to, suppress the gross margin a little bit. And then going forward, I have them improving 100 basis points per year through the year 2024 as they just get better at manufacturing and battery costs continue to decrease steadily. And so that's the thought process behind the automotive gross margin. Tesla's guided for 25% gross margin on their Model 3 in the long term, and like almost 30% gross margin for S and X. And so you might be saying like, oh, those numbers look low. But remember, they do include service revenue and service costs, which are about zero gross margin. So when you add those in, that's why it's a little bit lower. But overall, I do think these are going to be about right for Tesla. They've shown they can do the automotive business in the mid 20% range before the Model 3 ramp. So I think that's right where they're going to get back to. Now for energy gross margin, I took this down significantly in 2018 just because that gross margin was a lot weaker. The biggest reason being was in Q1, they recognized $75 million in revenue from the Australian battery project, which I think was a very low gross margin revenue number, probably because they just wanted to validate the technology, that it'd do it in 100 days. I think that was smart from a strategic business point of view because now they just signed a potentially 2.2 gigawatt or 2 gigawatt hour plus deal with PG&E in California, which is for a very similar power walls and batteries and power packs replacing peak emission plants, and which is the same thing they did in Australia. So I think with the Australian project, even though they didn't really make money on it, they validated their technology in a huge way, which is super important and is leading to more business, but that hurt gross margins in the short term, and that's why I believe energy gross margins are going to be about 12% this year, and then I have them rebounding in 2019, and I do think 15% is still a really low number for energy gross margins, but if they're ramping the solar roof, which is a big time new product, gross margins could be low on that to start. And then I have that sort of flatlining at about 17% in perpetuity, a low margin energy business, and that is what it is, sort of some guesswork there. Moving to SG&A and R&D, these expenses, I had to cut dramatically my estimates for SG&A and R&D. This might be the biggest change in the model. Tesla they did a restructuring earlier this year, and they just slowed spending a lot more than I personally anticipated. And this is one of my favorite parts about Tesla's model is like their revenue is really not linked to their operating expenses in the way that many other automotive companies are. And this is like a fundamental misunderstanding of a lot of skeptics and short sellers. Like Tesla's R&D and SG&A have been so bloated because they've been setting up to build and have, millions of cars on the road, yet they're only selling 100,000 a year. So of course their cost structure looked bloated. But now as their revenue is accelerating and they're finally delivering these hundreds of thousands, soon to be millions of cars, their operating expenses, the percentage of revenue is shrinking like crazy. And this is driving extreme operating leverage in the business model. And this is my favorite part about Tesla. And they've been doing even better than this than I expected. And so I still try to be pretty aggressive with my growth assumptions in the SG&A and R&D line, just to account for the fact that they're going to be growing so rapidly. But this is what I'm expecting going forward. And this is probably the biggest lever that they're pulling for profitability in their model. So now going to the fun part, expecting an operating income or operating loss about $400 million, and they have about $800 million operating loss through Q3. So that would mean a $400 million operating profit in Q4, which is right around in line with Q3, or almost exactly what they did in Q3. And then going forward, I think in 2019, they can do about a 5% operating margin, almost $2 billion in operating earnings, and then scale these earnings like crazy throughout the next couple years to about $21 billion plus in operating income, 14% operating margins in 2024. This would put them with like BMW, Porsche, like really like premium sort of car companies that are run like some of the best in the world, according to these experts. These companies have mid-teen gross margins, and I think Tesla will get to the mid-teen gross margins as well, but the difference is they're going going to be selling millions of cars and continuing to scale rapidly. So Tesla is going to be getting like these crazy premium margins, yet doing it at a mass market level. And that's why we're going to get one of the most profitable automakers in the entire world from this company. And so moving down to the last item, which is operating income per share, as you can see, I've actually toned down my estimates for shares outstanding or dilution in the future because Tesla said they're going to be profitable. They don't want to raise money. They don't want to keep raising equity. I priced in a massive amount of dilution in my previous model. I still think I priced in a good amount of dilution here, but I toned it back a little bit. And so this is operating income per share is sort of the number because it adjusts, per share. Right now Tesla's trading at like 330, 340 per share. If I think this is a company that in 5-6 years could be doing $100 in operating income per share. So I'm buying it now for like a 3.3x PE ratio. So if I think Tesla is still going to be valued like a pretty growthy company in 5 years, because it'll still be growing revenue at 20%, 30%, then it could be trading at like, let's say a 25 times multiple. A 25 times multiple on $100 per earnings per share is a $2,500 share price in the next 5 to 6 years. And that's kind of what my model's telling me. That's what I'm expecting. And so, and these are the numbers that back it up. Now let's get into the fun part, which is looking at all this in pictures, which I hope you like. So I have to start with this chart because remember, Tesla's, how many cars are they delivering? The most important thing. This is that number on a quarterly basis. And I just love the amount of growth the Model 3 is delivering here can't be understated. Anyway, on an annual basis, this is what Tesla's deliveries have been through 2018. This is what I'm looking at for Tesla's annual revenue through 2018. I'm just recapping the historicals before I get into the projected. Once again, and then this number I've said a ton of times, but 94% compounded annual growth rate for Tesla. This is just basically historically 2018 is almost done. So I don't know. I just can't get over how rapidly this company is growing and how they just have a track record of continuing to grow at astronomical rates. Like companies that keep growing, keep growing. Companies that fail to grow, keep failing to grow. That's just like what I've learned. Tesla has put up the numbers, has put up the growth numbers to justify a growthy and pricey valuation, in my opinion. And so this is what the financials picture has looked like thus far. Yes, they will not quite be profitable for the full year of 2018, but remember, they did post that big profit in Q3, and so the inflection point has already passed, even though we're not seeing it in the annual financials. So that's the recap. That's with these 3 products in their product pipeline, but now this is what's going to happen over the next 5 to 6 years that gets me so excited. Semi-truck, Roadster, Model Y, and the pickup are going to be the backbone for Tesla ramping its vehicle deliveries from 250,000 units to over 2 million units in 2024. I mean, the growth here is incredible. The Model 3, that yellow, the green is the Model Y, the orange is the pickup, and the semi is that purple number, which you can't really see, but they're selling the semi-truck for like 200 grand a pop, so even though it's less units, it's still a ton of revenue. Now let's move to that revenue line. As you can see, $150 billion revenue company by the year 2024. And yes, they're worth, $50 billion today. So I think this is a company that's trading for like a third of what its revenue will be in 5 to 6 years. And so this is the path of why I think, when Tesla's hitting $150 billion plus in revenue, Apple's doing something like $250 billion in revenue. So, Tesla will be getting close to where Apple is today by the year 2024. So just crazy stuff. And this is what the operating income put in there as well. As you can see, I have, Tesla from 2019 on scaling their profits nicely along with that revenue growth. I mean, this is the chart that I look at and I say, this is an asset that I want to buy for $50 billion because I think, if I keep holding it, this is going to be looking incredibly cheap. If they can be generating $20 billion plus in earnings, like 50 billion is just way too low of a number no matter how you slice it. And so if these numbers are anywhere close to right, I think Tesla has huge upside, and that's why I'm so bullish on the company. A couple X factors that I want to mention at the end of this that I haven't included in my model, which I think could actually drive way more growth in Tesla's financials, maybe not quite in the period through 2024, but maybe beyond that. And so the first one is the solar roof ramp. So Tesla has been very quiet about its solar roof. Skeptics love to say how this is delayed, but they've just been testing this. And I think this is going to be a mass market game changer for retail solar or consumer solar, going from putting panels on top of your roof, paying extra to do that, to embedding panels in your roof is just a huge innovation at a very high level. And Tesla's been perfecting this technology for 3 years. They are the ones who came came up with it. I think this could be, and I predicted in another video, this could be generating like tens and 20 or 30 billion of dollars of revenue if they get significant market share of roofs. And so even like 5 to 10% market share. So that's a product that I think I could have, remember, I only have total energy revenue hitting 15 billion by 2024, including batteries. If Tesla Solar Roof becomes a 20-30 billion dollar product, that energy revenue could be like 40 or 50 billion. So that's just one thing. The second thing, battery ramp. As Tesla gets more resources into its battery division, now that they've nailed down Model 3, I think, I think I said this earlier in the video, I could be totally underestimating how fast they're able to scale that battery business. And even on the conference call, when I asked Elon Musk about this a couple quarters ago, he was saying they're growing as fast as they can. Their biggest constraint is finding electricians to hire to be able to install these things. I mean, that's the kind of growing pains that Tesla's doing. They're fundamentally changing the industry so much, they have to like train new electricians to be able to install the batteries because they're selling so many more of them. So it's crazy. But anyway, I think I could be underestimating growth in those two areas. The third thing is the Model 2. This is a car that Elon Musk has referenced a couple times, which is basically a smaller version of the Model 3. Around $25,000, mass market sedan. I mean, if Tesla can sell 700,000 of the Model 3, they could be selling 1.5 million or 2 million units per year of this Model 2. That would probably be the backbone of the robot taxi network. I didn't even price that into my model at all, but that product alone could generate 10s, 20, 30, 40, 50 billion in revenue, and it's not even in my model. Then the next thing, the last thing, is the Tesla network. This theory of Tesla having autonomous robot taxis drive around, giving people rides, a combination of Airbnb and Uber. I mean, this is like the holy grail of transport in the next 10 or 20 years is achieving this. I believe Tesla is a huge market leader, or at least a leader in developing the technology to get to fully autonomous, based on the fact they have 8 cameras in their cars. They're generating billions of miles of data. They have their autopilot software in the wild. People can use it. You're driving your Tesla, you tap up twice on the side lever and it's driving itself for you. I mean, you do have to pay attention and stay on and keep your hands on the wheel, but like they're already inching closer to the self-driving future. And eventually, if they can achieve what's called general autonomy, you just press a button, the car's driving itself, the regulators approve. I mean, this is makes the car go from an asset that could generate $50,000 in revenue when you sell it, the Model 3, to a car that, let's say, an Uber it charges about $2 to drive a mile. Let's say the Model 3 in a robot taxi charges you 0.50 cents per mile to drive, and that Model 3 drives 200,000 miles. It's generating 100,000 in revenue from that Model 3 car at service type margins versus $50,000 in revenue if they just sell it outright. So the entire economics of what a car is and how much money you can make from a car as an operator of a fleet will get flipped on its head when the autonomy hits. And so imagine what happens if that Tesla can do that in freight with trucking, the Tesla freight network. I mean, the amount of opportunities once Tesla nails down this general autonomy solution is crazy and mind-boggling. And I've said it before, but I think it's almost like Tesla's car business is a Trojan horse to develop the technology for full autonomy, because that will be the holy grail, and the profits from just the ride-sharing service of robot taxi networks could dwarf their entire car business. And so the point is, I'm not even pricing that into my model. I think this has a ton of upside. I think it makes a ton of sense investing in Tesla personally because of just the auto business, not even really the energy business. I don't think I'm really accounting for much of that at all, then let alone what could happen with the Model 2, and then let alone the robot taxi holy grail. So this is my operating model for Tesla. Would love to know what you think in the comments, questions, concerns. Definitely check out the links if you're interested in the model and download it and play with it yourself so you can try and learn more. Also, of course, want to say this is not financial advice. These estimates are probably going to be way, way off. I'm constantly changing my model, constantly tweaking it. And so who knows if these estimates will be correct or not, if there's a huge recession, I don't know, anything could happen that could totally change these estimates. So it's important to keep that in mind. And this isn't financial advice. I'm long Tesla. This is what I believe is going to happen. These are just my opinions. But of course, I'm sharing with you on Hyperchange. So thank you so much for watching. Huge shout out to all of our Patreon supporters. And also, don't forget, don't be sleeping on the Hyperchange merch, which is out now on Cotton Bureau. It's only going to be available for probably a week or two more. And then once it's gone, it's gone. And I know everyone's going to be asking me Gally, you got that awesome Hyperchange tee. How do I get one? And you're not going to be able to get one because they're going to be sold out forever. So make sure to order it on Cotton Bureau. Anyway, that's my merch plug. I'll see you guys next time. Peace.